Bitcoin's price has seen a remarkable increase recently. Investors are showing significant interest. The financial world is watching Bitcoin closely. Understanding this surge requires looking at several economic signals. Bitcoin is reacting to these complex dynamics. Its value reflects a growing unease with traditional systems. A key driver for Bitcoin is investor concern over U.S. fiscal policy. Current government spending plans are causing worry. Former President Donald Trump's proposed One Big Beautiful Bill is a notable catalyst. This bill includes large tax cuts and welfare reforms. Such changes often lead to uncertainty in markets. Investors seek assets that might offer protection. Bitcoin is increasingly seen as one such asset. The U.S. has faced persistent budget deficits for over 2 decades. The national debt currently exceeds $36 trillion. Annual interest payments on this debt are substantial. The Congressional Budget Office projects these payments will surpass $1 trillion by fiscal year 2026. This challenging fiscal picture has consequences. Rating agencies have downgraded U.S. government debt. Such downgrades signal reduced confidence in the nation's ability to manage its finances. When traditional safe havens like government bonds appear riskier, investors look elsewhere. Bitcoin, with its decentralized nature, offers a different kind of security. It is not tied to any single government's fiscal decisions. This independence is a major part of its appeal today. Concerns about inflation are growing. Excessive money printing by central banks is a primary cause. We saw an unprecedented expansion in the M2 money supply after the COVID-19 pandemic. This led to significant inflationary pressures. Consumers felt the impact through higher prices. Data from early 2024 indicates a renewed increase in the M2 money supply. This raises fears about returning inflationary conditions. Bitcoin offers a potential hedge against this inflation. Its supply is strictly limited. There will only ever be 21 million Bitcoins created. This fixed and diminishing available supply makes Bitcoin scarce. Scarcity is a key characteristic of a store of value. As governments print more money, fiat currencies can lose purchasing power. Bitcoin, by contrast, cannot be inflated by printing more units. This makes it appealing to those seeking to protect their wealth. Historically, gold has been the preferred asset for hedging against inflation. However, Bitcoin has shown remarkable performance. The profile of the typical Bitcoin investor is changing. Historically, retail investors were the early adopters. Institutional capital, however, remained hesitant for a long time. Now, that trend is reversing. Large institutional investors are entering the Bitcoin market. This includes hedge funds and pension funds. Family offices are also increasingly allocating funds to Bitcoin. This shift signifies a growing mainstream acceptance of Bitcoin as a legitimate asset class. Institutional investors are using various methods to gain exposure to Bitcoin. The approval of spot Bitcoin exchange-traded funds, ETFs, has been a game changer. These ETFs allow institutions to invest in Bitcoin easily through traditional brokerage accounts. Beyond ETFs, institutions are purchasing equity in companies with significant Bitcoin holdings. MicroStrategy is a prime example of such a company. Direct acquisition of Bitcoin for corporate treasuries is also becoming more common. We are seeing concrete examples of this increased corporate adoption. Trump Media and Technology Group, TMTG, announced plans to raise substantial capital. This capital is intended to establish a Bitcoin treasury. Section 4. Bitcoin versus gold and the rise of ETFs, a new financial paradigm. When considering Bitcoin's potential, comparisons to gold are often made. Gold has a long history as a store of value. Its global market capitalization is approximately $22 trillion. Bitcoin's market cap, while growing rapidly, is currently around $2 trillion. If Bitcoin were to reach a similar valuation as gold, it would imply a significant price increase. This would be an 11-fold rise from its current levels. Such growth could potentially push the value of a single Bitcoin towards $1 million. This comparison highlights the scale of Bitcoin's potential. Future projections can be even more ambitious. The introduction of spot Bitcoin ETFs in the United States in 2024 has been a pivotal moment. These investment vehicles have seen explosive growth. Assets under management in U.S. spot Bitcoin ETFs have already surpassed $135 billion. This is a remarkable achievement in a short period. Bitcoin ETFs are growing at a much faster pace. This rapid growth in Bitcoin ETF assets under management signifies a major shift. It shows how investors, particularly large institutions, are embracing Bitcoin. ETFs provide a regulated and accessible way to invest in Bitcoin. Section 5. The road ahead, navigating volatility, risks, and global perspectives. While the outlook for Bitcoin may seem bright, the path to higher prices is unlikely to be a straight line. Bitcoin has a history of significant price volatility. It has experienced severe drawdowns in the past. Declines of 70 to 80% are not unheard of. We saw such corrections in 2013. Another occurred in 2017 after the ICO boom collapsed. More recently, the Terra Luna implosion in 2021 also led to a sharp market downturn. Investors should be prepared for potential turbulence. This is a characteristic of a young and evolving asset class. Several factors could trigger future corrections in the Bitcoin market. Rising interest rates globally could make holding non-yielding assets like Bitcoin less attractive. A corporate treasury meltdown, perhaps involving a large holder like MicroStrategy, could lead to forced liquidations. Such an event would put significant downward pressure on prices. Minor insolvency, driven by falling prices or rising energy costs, could also disrupt the market. These are real risks that need careful consideration. The market is complex and interconnected. Market sentiment plays a crucial role in Bitcoin's price movements. The crypto market is often driven by cycles of fear and greed. Rational decision-making is key, especially when faced with extreme volatility.